Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures. It's a beautiful Friday morning here, June 12th, and we're here to talk to you about the grain markets. Okay, the corn market here. First chart of corn I put up in front of you, doesn't it, in the short term? It looks like it's going from the lower left to the upper right. So, you know, the funds have a 282,000 short position in corn. That's a lot. And our experience says this creates a huge potential pool of short covering if given the reason here. So we'll kind of keep talking about that. The 30-day volatility, corn option volatility for early June, it's at a 10-year low, so things are really slowing down in the corn trade. Overnight we had a 1 cent range between the low and the high, so let's look for this to improve here as we move into the June, July, August growing period, the pollination period for the row crops. Okay, the soybean market. Here's a chart of soybeans. You know, they're higher here today. A neutral crop report. I think soybeans could go 20 cents higher here in the short term. Certainly the next big report is June 30th. This is $1 million report where we'll get the acreage mix of corn and soybeans. China, there's so many reports of what China will do, and this is on purpose to keep everyone guessing. Tuesday, Reuters had a report, China buying 4 vessels of U.S. soybean out of the Pacific Northwest. Wednesday, we had no confirmation of that. Something interesting going on in here, China is paying $18 more for soybeans out of Brazil, so we're a little bit more cost-effective U.S. versus Brazil soybean right here, right now. I read an article this week in the Financial Times about Australia and China. Their relationships are souring here, and Beijing sank in Australia's banks and some of their barley and beef exports, and China remains dependent on Australian iron ore for their big infrastructure. And of course, China, the biggest steel producer in the world today, and they get all their iron ore from Australia. So it's not just China, USA that are squabbling here. It's China, Australia, and also all these big commodity countries should come together here, and let's have free trade and grow the world market together here. So the soybeans, China this week, they bought U.S. soybean, like I mentioned. They bought U.S. sorghum, they bought wheat, they bought cotton, they bought hides, and they bought pork. So we'll keep reporting on all of that. The wheat market in here continues to look overseas for direction. Big range of exports on wheat export sales every week. Big range of what Russian production is going to be. And, you know, the wheat trade, they can find a dry area in the world, but it doesn't add up to lower global wheat stocks. We had the report yesterday, and you're getting higher wheat stocks around the world as we speak. So, Wednesday, Goldman advised all their clients to get out of their long commodities except metals. Well, Goldman Sachs can certainly be wrong, and I wouldn't stop buying commodities because Goldman told you to do so. And yesterday we had the 4th biggest drop in the Dow Jones in the history of our markets. So let's have the mindset to prosper from this volatility and not be run over by it. Let's all have an excellent weekend.